it's Kevin here from Voy Media. In today's episode, we're going to go over how to calculate your ROAS and also how to be thinking about your ROAS when you want to make profit on your products, which everybody does. So this calculator will help you figure that out very easily, and you can use these metrics to either scale your ads or to see when your ads are doing poorly. Super excited to show you guys this episode. If you guys want the calculator in this episode, feel free to just email me, Kevin@VoyMedia, or leave a comment below on our YouTube channel. But let's go in. So here we have the KPI calculation spreadsheet. In this spreadsheet, we will want to show you guys how to be thinking about your ROAS and how to be thinking about how to scale up ads or also scale down ads. I'll show you guys what sheet looks like, and you guys can either request them from us or you can make this yourself. Pretty simple. Really, some of the things that we want to be thinking about for your brand is what's your average order value, what are your average fees, average cost of goods, including the shipping to make it easy, and your profit target. These are the four numbers that we look at. This will then spit out the numbers that you guys need in order to know how to scale or not scale your campaigns. And again, we also have this advanced variables here, but we're not going to touch those at the moment. We're also having a baseline conversion rate is about 1.43%. Let's take a look at this calculator and see how you guys can think about it. Let's say your average order value is $100 of a product that you're selling. What is average fees? So average fees is kind of like your credit card fees, Stripe fees, your software fees, just the basic fees that you have. You always want to add some of these numbers to your calculation. That way you can be sure that you're making profit and also not in a negative. Now we want to add in what's your average cost of goods sold, including shipping. So this number is pretty important because this is how much does your product cost to make and ship. So let's say your average order value is $100, and for example, it costs you $40 to make and ship the product. Let's say you want to make a 10% profit margin. How much you can spend on Facebook to acquire this customer? Remember, we're not going to be looking at these for now. We're just going to be looking at this number, and we can look at the other ones much later on. So basically, if you want to break even, which for us means no profit, no loss, that means your ROAS on Facebook needs to be 1.75. This is the minimum number that your ads need to hit in order for you to sell the product, but also at the same time not lose any money. Like I said in my previous episode, depending on what deals you have, how much shipping you're paying, this number can go up and down. For example, let's say you're selling this product and you have another competitor that also sells a product. It could potentially cost them only $25 to make the product. So now their return on ad spend can be much lower because they have a better deal with their factory, they have better shipping rates. And this is why, like I said before, your ROAS shouldn't be something that you just read online. It should depend on your business, what deals and numbers you're getting for your company. Anyways, going back to the other example where we had 40, your minimum ROAS now is going to be 1.75. So let's say you want to make 10% profit on every sale that you get. What should your ROAS be? So if you want to make at least 10% profit on every sale, now your ROAS needs to be 2.13. So essentially, you can only spend $47 on Facebook to acquire a customer. That's essentially what your CPA is, your cost per purchase. So now let's say you want to make, for example, 30% profit margin. Look at this. Your break-even numbers don't update because this is the minimum that you need to spend. When you're thinking about campaigns and scaling, you want to have these two numbers in mind and also at least know how much profit you're making at every step of the ROAS as it goes up or down, depending on your profit targets for that month or for the year. Now with the same widget that costs, average order is $100, it costs you $40 to make and ship, and you want to hit a 30% profit margin. Now your ROAS on Facebook needs to be 3.70, and you can only spend $27 to acquire the customer. Guys, so that's how you think about ROAS. Having a calculator like this is so easy to use, and it's so useful for you as a business to know. That way you can say, okay, this month we made 10% profit margin. Okay, we're still good. Next month we made 25%. And you can say, this is a month that we made 25% profit margin, but I only want to make 10%. This means that we can really scale the ads up because we're still making money. And of course, we want to move more units and more inventory. Thanks for watching this episode on how to figure out what your ROAS should be. And again, if you guys need this calculator, feel free to email me, Kevin@VoyMedia. Please make sure to like and subscribe to us on YouTube. Thanks.